massive day for energy stocks in particular. We've got Saudi Aramco posting the largest ever profits for an oil and gas company, and the CEO claiming the largest ever profits for a corporate. Full stop. While here in the UAE, ADNOC Gas gets ready to list on the ADX a little bit later this morning. Very pleased to be joined by the energy expert Justin Dargin. He's from the Carnegie Endowment Foundation. Justin, good morning. Thanks for joining us live from Washington.
Good morning. Thank you for having me, Brandy.
Let's start with those absolutely fantastic Saudi Aramco numbers, 160 billion in profit for 2022. Is it simplistic to say that this is just a higher energy price story?
Well, I mean, what I would say is that, of course, the energy prices have been one of the major drivers behind Aramco's record-setting profit. But, I mean, overall, we have to put this in the context of the macroeconomic reformation has been occurring in Saudi Arabia and, of course, across the region. So what Saudi Arabia is attempting to do is to place Aramco as being alongside its peers in the West. So, for instance, alongside of the ExxonMobils, the Shells, and so on and so forth. So that's why Saudi Arabia is really attempting to utilize the profit that it has been gaining with the higher energy prices and plowing that into trying to adapt to the changing market and trying to adopt as well Western best practices. So we can see that, yes, I mean, the greater profit that Aramco has been able to attain is due to the higher energy prices. But then overall, if we look at the sector, we can see that the modernization and also the somewhat westernization in best practices that Saudi Arabia has been attempting to implement is also one of the reasons that Aramco has been able to acquire such a record-setting profit.
Well, the Aramco boss, Emma Nass, has also been talking about the dangers of underinvestment in the industry, saying the company is embarking on its largest capital expenditure program in its history. What is needed in the energy space right now, Justin?
Well, you see, there's a huge issue in the energy space. So on one hand, at least as it pertains to Western energy companies, you have the governments in the West that have been increasing the tempo of the rhetoric against oil and gas production over the past few years. So when you have an oil company in the West that is looking at where it should invest in for the long term, it sees that as being a risky proposition to invest in oil and gas production. So this is why you have seen a type of pullback from investment in production, and you see that now many of the Western oil companies are sitting on a pile of cash and they're deciding to prioritize their shareholders. But underinvestment is going to be a major problem going forward, at least from the side of the Western international oil companies. So as a result, you see the Aramcos, you see ADNOC and other national oil companies are going to come into that space and actually begin to increase their production over the next several years to take advantage of that, where many of the Western oil companies are fearing to invest in that.
How does that work, though, with OPEC constraints and what people can produce and sell? How do those two parts of the pie fit together?
Oh, yeah, absolutely. Well, here's the thing. When you have the OPEC quotas, OPEC has, of course, released its demand data, which it perceives how oil demand is going to develop over the next several years. And, of course, it sees that global demand is going to remain quite robust. So what we can expect to see is that over the next year or so that perhaps some of the stricter quotas are going to be renewed, and we can start to see an increase in production from these countries. But I do not expect that there's going to be a tight quota system over the next few years going forward, especially as we see many of the Western oil companies are pulling back from long-term investment in their productive assets.
And then we've got ADNOC Gas listening today in Abu Dhabi in a couple of hours, actually, on the ADX. What will you be watching and listening from ADNOC Gas as a listed company? What is their role in the global gas picture likely to look like this year?
Oh, well, ADNOC is becoming actually quite aggressive in terms of how it intends to adapt itself to the energy transition. So ADNOC perceives, and ADNOC Gas, which it's spun off of its main holding company, it perceives that there's going to be a greater demand for its assets. And as opposed to many of the Western IOCs and the pressure that they have been facing from their countries and from proposed regulations and also lawsuits. ADNOC and ADNOC Gas is fairly insulated to that. So you have a type of a unified strategic direction, which is from the government, of course, and then also you have the fact that they are plowing billions of dollars into investment in their productive assets. And the war in Europe, of course, is one of the major factors as they see that Europe is going to be a major destination for their LNG exports going forward as Europe attempts to diversify away from Russian gas. So again, just to summarize, as we start to see Western oil companies pulling back from long-term investments, we're starting to see the Gulf national oil companies actually moving into that space and taking advantage of the vacuum.
30 seconds left with you, Justin, so let's keep this quick. But how high could energy prices go this year, given all of those factors?
Well, it depends on, again, several factors. One, we're going to have to see what happens later on today when the U.S. Markets are going to open. If we see if this contagion risk from the bank failures are going to spread. So, of course, if this happens in the short term, the oil energy sector is not immune to that. But however, if that does not happen, I believe that, well, of course, we're going to see a fairly robust energy share price in terms of oil and natural gas going forward, simply because of the fact that the war in Europe is still ongoing, and Europe is seeking to still diversify away from Russian natural gas and oil.
Justin Dargin, energy expert with the Carnegie Endowment in Washington. Thank you so much for joining us on the line today.
This is the Business Breakfast.
Download the ARN Play app and take Dubai Eye 103.8 with you on the